I'm 680 News Senior Business Editor Mike Epple. It's the most anticipated stock sale of the year on Wall Street, perhaps in years, in the tech sector, as Uber today started its roadshow to industry analysts, unveiling plans for its upcoming stock sale on the New York Stock Exchange. The ride-hailing company says it will list its stock next month, priced between $44 to $50 per share. They're going to sell 180 million shares. And if they're at the top end of the range, that will raise $9 billion of working capital and give Uber a total value of about $90 billion. Now, Uber is trying to avoid some of the hiccups that rival Lyft has seen. 3 weeks removed from its stock listing on Wall Street, where Lyft shares debuted and quickly fell by 22%. Uber will list early next month on the New York Stock Exchange under the ticker symbol UBER. Well, Amazon can do no wrong. Latest earnings from the retail giant pointing to strength pretty much across the board, whether it's in internet shopping, Whole Foods, its cloud service, Amazon Prime, the streaming service, what have you. Amazon made $3.5 billion in the first quarter in profit. Sales were up. The profit was double a year ago. And it's also planning to speed up deliveries for its Prime membership service. Right now, it's at a 2-day max. They want to get that down to 1-day delivery for Amazon Prime subscribers. They're going to have to spend about $1 billion to ramp things up with more delivery centers. They're going to start that in the U.S. and expand that to Canada. Ford Motor Company, earnings still driven by pickup truck sales. The numbers out of the U.S. for Ford's latest quarter showed big sales gains for the F-150 pickup, the leader in the segment. Pickup trucks are huge profit generators for the Detroit 3, and sales have been steady, if not climbing, because the price for gas, most recently, up until recently, rather, has been fairly inexpensive. We'll see what the go-forward sales of pickup trucks are as the price of the pumps moves higher. Ford stock, though, today gained close to 10%. Intel, meantime, had a rough go of things on the market. Its biggest one-day sell-off on Wall Street in a decade. Shares of the world's largest computer chip company fell 9% today after they issued guidance for the year that was below forecast, so that could trip up profitability for Intel going forward. First quarter earnings in from the world's largest energy company. Exxon made $2.25 billion in its latest quarter, and that is comparable to history for Exxon when it used to make $9 to $10 billion a quarter, is relatively low, and production was curtailed as well. Its Canadian operations under the Imperial Oil banner also below forecast, but Imperial Oil is raising its quarterly dividend. And the best performing stock this week and this year on the TSX, Canopy Growth. The leader in the cannabis space, just over a week ago, announced that $4 billion purchase of acreage holdings of New York State. Since then, the share price of Canopy over 5 days has gone up 13%, and year to date, up by 84%. From the 680 newsroom, I'm Mike Epple for City News.